Welcome to ForexTV.com. Today's Monday, July 21st. I'm Remy Hookie for New York Forex Market Buzz. In afternoon trade, the U.S. dollar has come off session highs against the euro, yen, as well as pound. Meanwhile, the euro hit a new record high versus the yen at 169.89. And now taking a look at the latest headlines from the CP News Desk. After months of volatility, U.S. equities are edging lower in afternoon trade. U.S. stocks opened higher after Bank of America reported better than expected earnings. The company earned 72 cents per share, better than the 54-cent per share consensus estimate. And taking a look at U.S. data releases, according to the Conference Board, the index of U.S. leading indicators deteriorated 0.1% in June. This follows a revised 0.2% decline in May. The previous month's decline was reported as a 0.1% gain, and the index posted a 0.1% gain in April. Over the past 6 months, the leading index has fallen 0.9%, with 3 of the 10 components advancing. And overnight, the Bundesbank said that the German economy slowed in Q2 of 2008 as construction production deteriorated and rising inflation limited consumption. After a mild winter boosted construction output and helped push economic growth to a surprisingly strong 1.5% in Q1, the Bundesbank stressed that the weakness in Q2 would be due to a technical correction. Second quarter GDP data is expected to be released on August 14th. Meanwhile, according to the Rightmove House Price Index, the average asking price for homes in the UK fell by 1.8% on a monthly basis in July. Compared to the same month in 2007, July's average asking price fell 2%, down from the 0.1% annualized gain recorded in June of 2008. And this afternoon, I'm joined by Rhonda Staskow, Regional Director of FX at Thomson Reuters. Good afternoon, Rhonda.
Good afternoon.
Thanks for joining us today. Well, it has been quiet on the data front here in the U.S., and the broader equity market has turned negative, shedding gains from earlier in the session. But we're also seeing that the dollar has come off session highs against the majors. So euro-dollar has been trading in a narrow range since the North American Open. And given that there are plenty of Eurozone data releases this week, as well as U.S. earnings reports, what's your forecast for the euro against both the U.S. currency as well as the yen?
Well, I think for the euro, you're still going to look for selling into rallies. As you well know, the data we've seen come out in the last few weeks out of the Eurozone is not particularly attractive, and signs that slowing global growth is starting to affect the Eurozone is starting to increase in the fact that you're getting quickly flowing data such as confidence data, the latest just last week from Belgium showing declining confidence. So for that matter, even though we saw that one move above 160, there are some views, particularly after very positive consumer banking data from Wells Fargo and also a positive view from Citi results and also from Bank of America, that maybe some parts of the U.S. economy and the U.S. banking system are not doing that poorly. So you're going to have a battle here with some of the negatives still hanging around the U.S. economy that will support the euro and dips, but on the other hand, you have the economy turning south at this point, which is keeping the euro cap. So I'd still look to sell towards 160. Now, the euro-yen is serving to be really a conundrum for the market. Nothing seems to put that cross down, and it's been in an upward trend for 8 years. And even though we had the VIX go back above 30 last week, which usually is negative for euro-yen continued to go up. Even though we had poor data out of the Eurozone, euro-yen continued to go up. And even one of the more recent correlations, which is oil, that often performs with euro-yen, oil came down and yet euro-yen went up. There are some concerns that there's nothing that will keep the euro-yen down anymore, with a focus on increased sovereign wealth investment that may favor the euro over the dollar and over the yen, which will see the euro-yen continue to go higher. The fact that the market now seems there's nothing to keep the euro-yen from going down anymore means that we might start getting more jawboning from European officials who may be upset with euro-yen, particularly if it can get a toehold over 170 and hold. Today we've seen 170, just before 170 capped across because of option defense. I haven't been bullish on the euro-yen for some time for a number of reasons, including the yield spread, including the outlook for the Eurozone economy. But nevertheless, we may still get an attempt to try the options at 170 and 171 before we see a correction lower in euro-yen.
Well, Rhonda, while we're on the yen, I would also like to take a closer look at dollar yen. The pair has seen a rebound from last week's low, and dollar yen is having a hard time getting past the 200-day moving average, which is at 107.17 right now. But we did see a recovery from below the 103.70 level. So what is your strategy in the upcoming sessions for dollar against the yen?
Well, I'm afraid I've been boring for quite some time, so that even though the market is really looking at that 200-day moving average at 107.15, quite frankly, there's still sellers above that level all the way up to 107.60-65. We've seen vols fall today and a move back into the range of 105, 109 that's easily been containing trading, and it has option interest containing that range as well. I still favor range trading on dollar yen for now and expect the exporters, amongst others, will be sellers on dollar yen towards 108 and above that will continue to cap the currency, and yet you'll get importers and Japanese, such as Japanese oil companies and Japanese investors buying on dips. So I'm still looking for broad range trading within 105 and 109. Even if it breaks the 200-day moving average, the expectations are for fresh sellers to sell into the rally and continue to keep it range bound, which drove option vols lower today as well.
Well, Rhonda, before we shift our focus away from the yen, let's also take a look at the commodity currencies of the Aussie dollar and the Kiwi. In the respective economies of the currencies, on Wednesday we have Australian consumer prices as well as the RBNZ rate decision. Now, the central bank is expected to stay on hold, but New Zealand is also seeing deterioration in economic growth. So there is a risk that the bank may lower rates. So, Rhonda, what is your forecast ahead of this week's events for the Aussie as well as the Kiwi against the majors?
Okay, for the Aussie, what's been interesting is a recent development with the fall in commodity prices, and that's really hampered the Aussie performance. And I think going forward, you're going to see commodities under more pressure. One is because I think you'll have a pickup in the dollar and stocks look like they're bottoming. But two, many are well aware that China will be closing many of its factories in North China towards Beijing over the Olympics. As a result, demand out of China for commodities is expected to fall. In addition, the fact that infrastructure for the Olympics is largely over, that's going to dampen demand for China as well. And I think that is one factor amongst others, which includes slowing global growth, that we'll see commodities falter over the next couple of months, which will help cap Aussie gains. On the flip side, as we well know, recent negotiations in commodity prices for iron ore and also for coking coal mean that Australian exporters have larger receipts now to hedge because of the increased revenue. So to that extent, I think you're still going to see buying on dips towards 95, but I'd still look to sell towards 98 on a deteriorating outlook for commodities. Now, moving on to the New Zealand dollar, we had a surprising break last week where we saw the Kiwi surge that took it above the downtrend that's held since the beginning of the year, but it's come right back again, and it has resumed the downtrend that will probably see it trade back to the year's lows of 73.85. The latest factors weighing on Kiwi, of course, were the credit card data as well as electronic transactions data, both out last night, and both multi-year lows in terms of growth as the economy slows. Petrol prices have also dropped 8 New Zealand cents in the last week as well, and many feel that this will give the RBNZ an excuse to take a more dovish tone, helping pave the way for rate cuts in future meetings. So as a result, I still expect the Kiwi to go down. I also expect Kiwi yen to break down, which has been in a range of 80 to 83 for quite some time, and expect that cross to go to 76.5 or below, with Japanese investors quite long that cross.
Okay, Rhonda, now that we've covered some of the dollar block currencies as well as the euro, let's take a look at cable. On Wednesday, the Bank of England releases the MPC minutes from their latest rate decision, and on Thursday, UK retail sales will be released, and on Friday, Q2 GDP will be released. So for the UK currency against the euro as well as the dollar, if you could give us your fundamental outlook as well as technical forecast.
Well, for sterling, it's had some surprising gains back to 2, but similar to euro, I think you're seeing slowing growth catching up with that part of the globe, and I would still prefer to sell sterling on rallies and look for it to go back into the current range that's finding a base around 194 or 195. Not that it's going to run away to the downside, but I still wouldn't want to own cable above 2 given the risk for more poor data. I mean, we just had BOE Blanchflower say that he believes the economy is already in a recession today, and that's helping weigh on the currency. And as for euro sterling, I think that battle between who's doing worse, which appears to be sterling right now, will continue to keep that cross in a range. Frankly, it's very difficult to buy euro sterling up here, and its recent gains have stalled under the highs we saw previously this year, which were closer to almost 81. So I think that there will be continued range trading, but I think the increased risk is to the downside only because the market remains so long the euro right now as opposed to sterling.
Okay, Rhonda, thank you very much for joining me this afternoon, and thank you very much for insight into the Forex marketplace. This has been your Forex Market Buzz with Rhonda Staskow, Regional Director of FX at Thomson Reuters. I'm Remy Hokie. Join us later this afternoon, 4 p.m. exchange, right here on ForexTV.com.